Oh, baby, here we go. All right, here we got some exciting stuff coming up. There's a guy named Devin that follows this channel, and he's like, tell me where you are all the time. I want to know where you are because you travel in the world and I got to live through you. And I'm like, okay, Devin, I'll tell you. So, anyway, I'm in the Philippines right now. I've been here for about a week. I'll probably be here another week or so, and then I'm rocking and rolling. So, thanks, Devin, but I'm in Philippines. All right, here's what this video is going to do. We're going to be analyzing the best stocks of the last 5 years, okay? This could be quite a long video, but if you stick through all of it, I'm going to be touching on what makes each of the different stocks, from mostly a technical perspective, what makes them awesome so that you can find the awesome stocks going forward, right? I can't find them all for you. I point out what my predictions are, but things change, right? The markets change, stocks change, life changes, right? You want to make God laugh, tell her your plans, right? So what I'm doing here is a lot of people seem to like the way I analyze stocks. So for those people, and maybe if you're new, maybe you'll like the way I analyze stocks. I'm just going to go through and I'm going to show you like what it looked like in the last 5 years and what it looked like 5 years ago and then what it looks like today. So if you can, follow along, great. If you want to skip through and find the particular stocks that you want, I'll have that hopefully down in the chapters below. But you're going to learn something on each and every stock. So I recommend you stick through to the end because even though I geek out on it, but a lot of people get bored with this, but maybe you won't get bored. Maybe you'll see, oh my God, this is really cool. There's a science to it. There's art and science to it. And so let's just get going here. I want to start sharing my screen and give you the best stocks of the last 5 years. Now, by the way, I'll talk about this in just a second, but what I do is I write calls against the stock. So I create income whether the stock goes up, down, or sideways. And that's how I can get my edge, right? I have an edge. I have a program called the Cash Flow Machine. We buy the right stock in the right market at the right spot on the chart, and that's what this video is about. And then we squeeze the juice. So we're not talking about the covered calls portion of the portfolio in this particular video, but these would be stocks that we would squeeze the juice from. We would use in our covered call program because we like to have great performing stocks, what we call super stocks, and each of those is super stocks coming up down here. But I'm just letting you know, I do play defense and offense by writing calls and creating income every week on the stocks that I own. And some of these stocks are in here. So let's go. All right, the first one I'm going to start off with, and this is no surprise if you follow me, is that I've been invested in Tesla for almost 4 years. And here we are right at the beginning of 2024. And I'm going on just about 4 years in Tesla. It's been an incredible performer for me, but it's also had some challenges, right? And so you're going to see some of those challenges. Even when you're an income investor, you get the income every week, but if the stock doesn't perform, you're kind of stuck in it while you're waiting for it to perform. So anyway, I've been in this stock off and on for basically the better part of 10 years, off and on. And I was a hero when I bought the stock when it came out at like 28 or 30 or something like that. And then it doubled and I was like, woo! And then it went to 100 and I was like, wow, shoot, that's not so good. But off and on, I've even shorted it. I mean, Tesla has been in my portfolio for a lot of the last 10 years, but I've been in it solidly for the last 4. All right, let me jump in and show you how I do this. This is a monthly chart showing you from the very beginning, and this is all post-split. So Tesla's had a few splits along the way. It came out at like really $25 or $28 at some point, but it's split so many times that now it looks like that beginning stock price was like $1. And post-split, that's what happens to these companies when they split. All right, I'm not going to talk too much about those kinds of things. I am going to show you how to read patterns in just a second here. But let's look at Tesla, looking at like $1, and then, when it doubles, a lot of people take their money off the table. Like, how many people do you know that have bought a stock and have held it for 10 years? And if you bought this stock in 2010 and held it to 2020, you would have gone from $1 to 14, and you still would have been a hero, right? But if you held it till 2024, you would be, a superhero, right? So you could see that it's gone up. Now, this is a monthly, so it takes away a lot of the noise, but it goes up, and it goes up in spurts, right? Let's see if I can draw on the screen here. Yeah, so it goes up. You'll see it. It goes up right in here in this area, and it'll kind of consolidate, and then it'll have a spurt up. And that's what growth stocks do. They consolidate, and you're going to see this in almost every chart I pull up. Then it spurts up, and then it consolidates, William Darvis wrote a book back in the 50s. I think it was called How I Made $2 Million in the Stock Market. And this dude was a dancing instructor in Europe. So his stockbroker would send him teletypes or telexes, and they would tell him what the market closed at the day before and the stocks that he was looking at. And that's how he made it, because he took all the emotion out of it and just looked at the chart action. And what I'm showing you is what's called the Darvis box theory, right? He drew these little boxes and said stocks stay in these little boxes until they decide to move up to the next box. And so they move up, and look at how much that move up was, from 20 to almost 300, at least 250. And then it made another little Darvis box, right? Another little box. And then it jumped up again, and then it made a kind of a downward box, right? So the stocks have downtrends too. And so here's another one of those downtrend boxes, and you can see it's now making, a long-term box, I think, right? And so it wants to find this level here, and it wants to jump up and go higher. But if you had just looked at the stock in 2019, and these, I'm going to really focus on stocks that did well in the last 5 years, then this is what you're going to see. This is back in 2019. And so in 2019, the stock was basically at, let's call it, look at the right side of the chart. It was at $340 right in here, right? So you're seeing $340 being where the stock was. Well, that's pretty good because it was pre-split. Now, if you know, the stock is trading at 250, but this is a different thing. So when I look at the next chart, you're going to see the stock basically had its long consolidation, had a couple of cup and handles, a lot of cup and handles. And then it had a cup and handle where it actually broke out, jumped up, had a double bottom pattern, and it created a new bottoming pattern here in 2019. So if you had held it from basically 2014 to 2019, you did okay. But wow, wait till I show you the next chart, okay, which is what happened since 2019. So you're seeing this basic price right in here. It says 340, but when I show you this next slide, because it's post-split, you have to go back here to 2019, which is right in here. And so you're seeing that $20 level is where it was, right? $20, $30 level, whatever it was. But right in here, right where this black and this red are kind of convening, right? This is a box there. And so you can see there's a box created right in here, and that's where it went down in 2019 for sure. So that was a tough hold, but once it went up, it went crazy. Okay, you see that? Because this is where it broke out. And we want stocks that are going to break out. And by the way, when they break out, they run from 20 to 30 or 40 or 50, which is what this one did. It tripled, went from 20 to 60. And then all those people get greedy and they're like, oh, I don't want to lose my money. So they take the stock down while they sell it off. Make sense? And so they're taking the stock down while they sell it off. And then new buyers come in right around the 200-day moving average. And so they're going to run it back up. So they're going to be enjoying this little run up here, right? And these people that sold that, didn't sell are like now selling all the way up. They're like, okay, it's coming back. I'm going to sell. And that means there's no sellers left here, right? There's no sellers left in this area. So if there's no sellers left in this area and there's only buyers and there's a lot of buying, look at the volume down here, then you start to see some really significant run up, right? So you can see right in this area, it had a breakout and it took off, right? Took off right in June of 2020, somewhere in there. And it took off from, $70, $80, and it just kept running and running and running. And it ran up until 2021, up into the $260 level. And then it had a little consolidation. You can see that, right? And that's when you can say, all right, well, listen, I'm going to try to set up for the next run. Now, some of these runs get a little bit long in the tooth. This is a, first stage. It's actually like a first stage right in here, second stage, and this is a late second stage also. And then as it gets into a later stage base, this is a third stage base, that's when things start to falter because a lot more sellers and institutional sellers are in there and they're selling. Of course, looking back makes it a lot more easy to see. But you can see this is now beginning a double bottom base, but it couldn't handle it, right? And so it started to go down and it tested the 200-day and then it didn't handle it. And then it just basically started living under the 50, under the 200-day moving average. And as it continued to do that, it's got weaker. And this is when Elon Musk bought Twitter, and he got a lot of bad press, and people started to sell the stock off, and a lot of people started to buy it right here at 100. Now, I sat through all this. This was tough. I gotta be honest. Even though I'm getting income, when a stock goes from 300 to 100, it's tough to sit through it. And you can look at like, Mark, you're a fool to sit through it. You should have had a stop in. Yeah, of course you should have had a stop in. But let me ask you this question. When you're an income investor and you have a house and you lease the house out to somebody and they pay you rent every month, when Zillow says that it went down in value, do you sell the house or do you just collect the rent from the tenant? So those of you that are going to say, oh, you should have had a stop loss in. Yeah, in hindsight, I should have had a stop loss. I wish I were in a different stock. But I'm in Tesla for better or for worse because I think it's got great fundamentals. And it also has some great technicals. And in 2020, I did incredible on my account. I 5x'd my account. And so, yeah, okay, it starts to go down and I started to play a little bit more defense, but I didn't get out of the stock. I wish I would have, but maybe I'll look back a year from now or 2 years from now and say, I'm glad I didn't, right? That's the goal. And so I stick with it because I find that if you stick with things, unless they're going out of business, and I don't think Tesla's going out of business, as I said here at the early 2024, I don't want to be selling that stock. There's a ton of potential in that stock for me, right? And so it's building this base down here right now. And if you've watched some of my other videos on my predictions for 2024, you can see why I'm a big bull in Tesla, because in 2023, it had an incredible year. It basically started the year off at around $100, just a little bit more than 100, and it went up to 300. That's a triple, right? It's the opposite of what happened the year before in a bear market where it went from 300 down to 100. Make sense? So now I'm sitting here in this double bottom market and it's testing the 50-day and the 200-day and all these other things. And by the way, this is a weekly chart, so it's really a 10-week and a 40-week. But now, to me, the stock doesn't look like it's weak. It's selling off a little bit in the last 3 weeks on very low volume. And so to me, that's healthy. That's healthy for the stock. It wants to come up here and test this 278 level, 279. And that's where I think it wants to break out. But it's got to get rid of a bunch of sellers that are still in here. All right, so that's Tesla. And that's why I just want to show you what it's done in the last 5 years, because if you'd bought it in the last 5 years, the beginning of January of 2019, you would have basically gone from 18 to where it is today. I mean, you could have gone, I could say that you went up to 414 and you would have, but if you would have picked the top, then you're the genius. And maybe I should follow you. I'm not the genius either. I'm just the guy that reads charts and tries to give you probabilities. And, we've had a sell-off for the last couple of years, for sure. But if you look at it, the stock went to 400 and it went to 100. And it's sitting right in between those two levels. So, yes, from the $30 level, basically in the beginning of 2019, which is, the $20 level, $20 to $25 level, to a 10x, right? To the $260, $250 level, which is where it sits today. That's how I'm looking at them. So now I've kind of set the stage for you. I'll go a little quicker as we run through this, okay? I hope that makes sense. So let's go to the next one. The next one is a stock you probably haven't heard of. It's called Celsius Holdings, CELH, okay? And Celsius Holdings is an interesting stock, but I'm not going to go into the fundamentals. This is a technical analysis deal here. So we're just going to start pointing out stuff. But boy, wouldn't it have been nice to own this stock when it IPO'd at $1.20, post-split. So, or pre-split, I guess you can look at it depending on how you define it. But, the stock came out, IPO $1.20, and it ran up, and then it had a sell-off, which is what a lot of IPOs do. And then it made a little consolidation level here, and it kind of went in right there. And then you can see the volume was growing. This is all good signs for an IPO stock. And so when initial public offering stock has a lot of the sellers, this is a typical pattern on a stock that IPOs. A year later, it gets rid of all these sellers, all the insiders that are selling, all the people that have been there since the beginning. They're starting to sell off into this area right here, okay? And so they're selling off, and the stock starts to make a rounded bottom, and it rounds that bottom, and it comes up the other side. And there's no more sellers from this top here, right? At that level where I drew that line. Make sense? And so if there's no sellers, there's only buyers. And that's why when the volume increases and there's only buyers, you get these huge weekly, well, these are monthly candles, but huge monthly candles, 1, 2, 3, 4, 5, where the stock breaks out at $2.50 and it runs up 5 months in a row. and it goes up to $8, right? A quadrupling. And then it has a little 4-month consolidation. Doesn't look like much here, but the reason I'm showing you this long monthly chart is so you can get a feel. You can kind of cheat and go, okay, boy, that would have been nice to own for the last, 7 years, right? You can kind of cheat and get your mind ready to look at it. All this is pattern recognition. So now I want to go into the next chart, which is going to show you what was on those patterns. Okay, what was happening there. All right, so you can see that it had that huge run up, and then all the way into 2019, it ran down from 6 all the way down to 340. That was a tough part to sit through, but that's not what we're talking about. We're talking about the last 5 years. So if you look here to the right of the chart, the last weekly candle is January of 2019, right? Or the end of December of 2018. So from that spot, which is 340, let me show you the next chart, which is what happened, okay? Now, I'm not a bottom scooper, but if you had scooped the bottom, you would have been able to catch this thing from basically where it says, the bottom of this chart basically is $1.20, something like that, 340, which is, I guess we decided, and it kept going down. And then it went from that 340 level all the way to 60. So you would have made a 20x on your money. Now, we sell calls against it, so all the way up, we'd have been making 1% to 2% a week, which is our target, and we would have been cleaning up on the way the stock goes up, the way we trade, okay? And so you can see it has this little cup and handle, okay, and then it breaks out and has a nice run. And that's what we're trying to catch. We want stocks that are on these nice runs, and then they consolidate, and then they run up again, and then they consolidate, and they run up a little bit more, and they consolidate on top of that consolidation, which makes a very long consolidation. And usually that coils the spring, and then they run up a little more. That one did. I mean, that's still pretty good from, basically, what is that? About $30 to $40 it ran up, okay? Just under 40, right? And then it had a sell-off, okay? Because some of these bases get a little bit long in the tooth. They get a bit late. And when they're late, then there's a lot of skittish people at the top. They're going to start taking their profits and selling off. And you can see it busted down through its 10-week moving average. It busted down through its 40-week moving average. Then it had a death cross, which is where this 10 and 40 intersect on the downside. And you can see that coming down there, right? And now, as it comes down, it starts to make a cup. So it makes this long cup. Now, this is weeks, months, actually. It takes a long time to get rid of all these sellers. And then it has to build the right side of the base, where the buyers are coming in going, okay, is anybody going to sell against me? And now it makes a golden cross, which is where the red line crosses the black line, and the 10 crosses the 40 on the way up. And so that's where the institutions are like, hey, we got a golden cross, let's start getting back involved again. And then you can see that on high volume, we have some good up weeks, and it builds the right side of this base. Once it gets to the right side of the base, it doesn't have the volume to break through, because price has to have the volume. I look at price as the play-by-play announcer, and the volume as the color commentary, right? So if you have good volume when a stock is doing something at certain levels, at swing points, at pivot points, then that colors the price action. So if you have a breakout on good volume, you're probably going to have a continuation of the breakout. But if you have a breakout on lousy volume, you have a test on the other side. And that's what these stocks do. This is what, tested on the other side, made a cup, didn't have the volume to break out again. So it tested the 50-day moving average, created a little death cross there, and it went up the other side with another golden cross. And now look at the volume building here. Look at how many weeks in a row of that blue line, increasing volume as the stock goes into numbers. Then it has numbers, has a little consolidation at the $40 level, right? And you can see it going all the way from that $40 level all the way up to the $65 level. But boy, wouldn't it have been nice to buy this in early 2019, 2020. That's why the stock has gone up from $1.20 to basically 50, okay? That's a 50 banger. So if you put in $1,000 into your portfolio, you'd have 50,000. If you put in $100,000, you'd have 5 million, okay? Game-changing type stuff. I always say it only takes one stock to change your life. But you got to find the stock, and you got to be able to hold through some of these tough periods. And this Celsius was no different. It had a lot of tough periods in there. But if you can just kind of hold your nose and know that you have a good company, and I'm not saying you would have known on Celsius, right? Because it wasn't one of the big ones that we all know. I'm going to get into some of the big ones. All right, here we go. Here's the next one, Enphase. So take a quick snapshot in your brain of where Enphase started in 2012. It started around $6, had that IPO sell-off, and then came up the other side, and then had a little consolidation and broke out from the $6 level to the $14 level, so it more than doubled. And then it had big sell-offs, right? You can see 2015. Now this is a sector sell-off when all the solar stuff was going down, because Enphase has been a darling of the solar business, right? And as we sit here in 2024, you can see that it's not doing very well. It's 194 out of 197 industry sectors that are down, industry groups, and it's not performing well right now. But that's what this area is over here on the right. Okay, so you see that area on the right, and that's what's going on in that area. Okay, so but let's take a look. We've got the snapshot. So we had all this selling off, right? And then we had to it took a year to make, 3 years to make this happen, right? The sell-off, and it had to build the other side of it. And then we had a gap up here at the $10 level. And then on the other side of that, that's where we got, look at the increased volume here, right? See that increased volume? That's what tells you that the stock wants to go higher, because there's no more sellers over here. And now you've got increased volume in this area, and now the stock breaks out, okay? So once the stock breaks out, it's about the $20 level. It kind of goes up for a couple of months, down for a couple of months, but it's still holding steady above that $20 level. And now it goes higher and higher. Okay, so let's go to the 2019 level area chart. Okay, so you can go all the way back and you can see here's what happened. We had the big sell-off, and then coming in 2019, we built a nice right side of this very long sell-off, right? And we started to build a couple of bases in that period of time. This is now a weekly chart, okay? And then we had it kind of just hanging around that 40-day moving average, that black line there. It just kind of hung out there. And then at the end of 2019, it was, or 18, it was basically at $5. So remember that. Enphase is basically at $5 at the end of 2019, 18, okay? Beginning of 2019. All right, now let's look at it. Over here on the left side of the chart is kind of where we started. It was at around $16 or 15, whatever. I said it was $5, didn't I say? So it was at 5, and then it basically ran up, and it stayed well above that black line almost the whole time. We had a couple of weeks where it didn't. But most of the time it was above that, and it was above the 50-day moving average or the 10-week moving average on this chart. So we had cups and sell-offs. Cups and sell-offs, cup and a breakout, and then now we're really off and running. Look at how many weeks in a row here. In 2019, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row right in here where the stock was basically going crazy right in there. Make sense? And so that's telling you there's people that are interested in that. Then look at the earnings. 680% quarter over quarter earnings after a 650% quarter over quarter earnings report. So now the stock is blowing away earnings. It's probably increasing sales, right? You can certainly look down here and see just the last few quarters, but the sales were probably increasing. But the earnings is what drives stocks as well, okay? Earnings and sales is kind of like the McCartney and Lennon of stocks going up. And then you can see, look, from $5, it hit it hit $50 right in this level, right? 50, that's a 10x. And then a lot of people are saying, well, I got a 10x. I mean, it doesn't get any better than that. So they sold it back down to the $23 level. And so then, since they sold it down to the $23 level, then a new set of buyers came in, right? And they made this little cup and handle here, right in here. And then it broke out, had a little false test there because it didn't break out on a huge volume until it got to this candle here, which had some good volume, and then it had a lot of follow through. And then once you bought it in this area, that stock took off. It went all the way up to $225 from $5. Remember, we were, right? And then, of course, we had our buyers and sellers. We had another little breakout up to almost $300 up in this area right in here, which is probably what, 275, something like that. A sell-off, okay, on fairly light volume. Look at this volume, is not that heavy, right? And then the stock consolidated for a long period of time right in this little area. And then we had another breakout where it went to 340 bucks, okay? Enphase ran up to $340 before it started to break down. So if you were able to hold this from $5, now we collect income every week or every month, and if you were able to hold it and collect income, you would have been basically maxing out on, looks like about 80% of these weeks. That's how Enphase made its high. And then the solar sector started to sell off in here, right? And the EV sector is probably part of this too, right? This green energy thing is going out of style right now, as we said at the beginning of 2024. So if you have a product that's heavily involved in green energy and you're sitting in one of the weakest sectors in the market, well, you're going to suffer, even if you're collecting income, right? You have to wait for the next cycle to come back up, and it probably will if you're in, the right stock. That's Enphase. Let's go. All right, Axom Therapeutics, right? It did that typical base where it comes out here, it sells off because the insiders are selling and the street's selling and they're all booking their profits. And then it starts to build up. Look at this monthly candle here where it builds up. Now, I don't like those because they're generally not that healthy, but in this case, it was pretty healthy. It got up to its high right in here. So it finally doesn't have any sellers in that level. And then it broke out. You can see it breaking out. Look at the volume down here. Look at the volume over here where it started, and look at the volume now. This is like, it was at 10 times the volume. So there's a lot of money coming into the stock when you got 10 times the volume. That's the big money, the institutions coming in and buying this stock and making it go higher. And so look at it did. It went from $12 to double to 26. And then people were like, well, it doubled. I better get some selling going. So they sold off. But look at the volume that came in on these blue candles. Really significant blue volume, right? And on those candles, you can see, and these are monthlies, by the way, these candles went all the way up to 100, right? I mean, it IPO'd at 8. If you held it from 8, you at least would have had a 10x or 12x. And if you bought it into the $2, you would have. I mean, that's a tough buy, right? You would have been able to make a 50x. All right, let's take a look at what it looks like from here. All right, so here is at the beginning of 2019. The stock is at $2.60. Okay, so you can see if you waited until the beginning of 2019 to buy, you wouldn't have had to sit through all this. Okay, not that you would have anyway. But now, if you were able to pick that up at that beginning, what we say, it was $2.60 at the beginning of 2019. Now look what you got. You got this gigantic, which I talked about on a monthly. Now look at all the volume down here. Now, most of it's light volume, but it's all blue. How many weeks in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9, with a huge gap right here. Huge gap. You see this? It's hard to see, but there's a gap right in here in this area. Okay, where it just kept running up, and then it finally came up from the $2.60 level to $100, right? You made basically, 40x, 40 times your money. And those people that made 40 times their money, they said, let's sell off. And then it tested its 200-day moving average right here on volume. And it had another run up with a gap up. But notice how the volume is now coming down in here. And as the volume comes down, that's why this stock can't break out anymore, right? It just consolidates because every time it tries to go up, there's no more buyers to keep it up, right? So there's the sellers in here are still selling. That's the problem, is you have to go into all these sellers that are making all this money. And they're like, oh man, if it goes back up to 100, I'm going to sell it. And something about round numbers, by the way, is interesting. It makes people sell and it makes other people buy. In this case, people didn't buy, okay? So, this stock really didn't do anything for a long period of time. It just stayed in this box and tried to get above its 50-day moving average. And it tried to stay above its 200-day moving average, but it couldn't handle it. And basically the stock started to break down. But that was a pretty good run, 260 up to 100, right? Pretty nice. okay? I don't like stocks like this, just so you know, because here's what happens, and this is why I'm giving you these charts, is every year they lost money. Okay, this is a bio development company, and they put all their money into research and development, right? You can see how much money they put into research and development until they hit some big drug, and then all of a sudden they make a ton of money. So I don't like to buy stocks that don't make money. So this wouldn't, I'm going to be honest and say this wouldn't have been a stock I picked. Although I would have loved to say, taking credit to go from $2.60 to $100. It's not just the stock that I would pick. I like super stocks, and this isn't one of them because it doesn't have that earnings growth, that sales growth, that return on equity that I look for. But it is one of the best performers, so I got to point it out. Make sense? All right, you with me so far? All right, shake it off. We're going to continue to have some fun. All right, so I geek out on this. Maybe you're getting some things by osmosis. If you want to go back and watch it again, I'm going to really start to get into the price volume action in some of these next ones, okay? So you can get a feel for the price volume actions. So here's Super Microcomputer, which to me sounds like a joke, right? It's like you have your 10-year-old kid name the company. I got a computer company, little Teddy. What are we going to name it? And he goes, Daddy, I think you should name it Super Microcomputer, right? That's what it sounds like to me. That's how they name the company. But anyway, so it's Super Microcomputer, and you can look, it's Super Macro Get Rich company, right? So if you just look at this from 2007 when it came public, it went from basically the $8 level all the way to the $300 level. That's the macro picture. All right, let's jump in and say, okay, here we are at the beginning over here on the right side of the chart at the beginning of 2019. The stock is at $14 after a very long decline, by the way, right? This is a long decline. For 5 years, the stock went down, right? So even though there were a couple of spots to buy it here, the stock just couldn't get out of its own way, and it kept going down, right? And that's what happens when you buy a low cap stock. And this was a low cap stock for a long time, okay? But then at the bottom of all of that, here we are, and let's remember this price. Let's just call it $15. It's a little bit, 15 and change right there, but we'll call it $15, okay? And now we'll look at the next chart. $15 at the beginning of 2019, and that's over here on the left side of the chart. And then here's what it did. It had a golden cross right in this level here. See that level right there? That's a golden cross. And then it had a little consolidation. Now it's a logarithmic chart, so it's hard to see these, but the percentages are gigantic, right? This is a 10% move in just this little box right here, okay? And then it ran up to $30 from the $18, the $15 level, which is where we started. So it doubled. And then people were like, well, it doubled, and they sold it off. Now you can see the market had a sell-off here. And commensurate with the market sell-off was people selling off SMCI, because that's 2020, COVID, right? And so the market sold off, so did MCI. It went down and bottomed, and now you can see 5 weeks of increasing volume. That's not good. But most stocks had that going on in 2020, by the way. So if you had bought at the beginning of 2019, you would have had to sit through that in the middle of 2020, okay? But then look at all of these blue weeks that happen right in here, okay? It's like, I don't know, 80% of the weeks are blue or green. You can call them, whatever, but blue shows up better on the charts. And look at them. They're all closing at higher highs, a lot of them, higher highs, higher lows. The stock just keeps going up until it gets to this level where it wants to break out, okay? And it tries to break out, and it does it on good volume, but it sells off. So that's one of those false breakouts. 40% of breakouts work. 60% of breakouts work on volume. 40% don't. And this was one of the ones that don't, because it had the volume, it had the breakout point, it just couldn't handle it. And so it broke down and went down to the 50, tested it on some decent volume, not great volume, but tested the 50 and tested the 200 on the same week. Kept going down slightly, and finally made a bottom here. And you can see there's a consolidation in this area I talked about at the top of the video. Now, when that consolidation gets rid of all these sellers that are in here and some that are in here, now you've got nothing but buyers. So it took a long time to get rid of all those sellers, but now you've got nothing but buyers in this area. And so The company is trying to break out, trying, but there's no reason for it to break out. Finally, it has an earnings per share breakout, but not enough volume. Just a slight amount of volume. You see it down here. You with me so far? Okay. So let's see what I got here. All right. So now the company is consolidating. It makes another little base right in this area. Okay, makes a little base right in this area. And now it breaks out again. Woo! Now it goes to 40. Remember, we started at 15. Now it's at 40. Breaks down, makes a very healthy cup because the volume is really low there. So there's not a lot of selling, not a lot of big sellers anyway. And then it makes another little consolidation there. Look at it. It's really tight in there. There's not a lot of selling and not a lot of buying. But look at this candle right here. This is the big candle right here. Earnings per share was only up 5%, but look at this volume. The average volume is about, I don't know, let's call it 900,000. This candle is about 4.5 million. Okay, so it's about 5x volume. That's a big candle, but not big enough to keep it going. So it makes this long consolidation in here again, right? And then it has another big candle. Now it's up 210%. That's some significant earnings growth. Couldn't handle it. So this stock, because it's a small cap stock, doesn't have the ability to continue to run. So it's early for this stock. It still made the list, but it's early. And so it, kind of made a little consolidation, had a sell-off, tested the 50, tested the 200, and now look at how many weeks in a row it went up. Higher highs, higher lows. Like 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. Pretty good volume, not great volume, but pretty good volume on that side. Then it couldn't handle it. But if you notice that we're creeping up, and now the stock that was at 15 is 4x that. It's at 60. Now you got to sit through all of this, up and down because it's a small cap stock. It's a cheap stock. And if you could sit through all that, great. If you forgot about it and, Rip Van Winkle it and woke up after, a couple of years, you'd have been really happy. Then it makes another cup, breaks out on good volume again. Nice. Makes another consolidation on top of that. Not a very big breakout, which is fine. But it still kind of hangs in there around the price that it broke out. And then look at this. Over here on the right is where it really went crazy. Okay. 2023, 1, 2, 3, 4, 5, 6. Out of 7 weeks, 6 of them were up weeks. And they were up on really good volume. All higher than the average daily volume and all, really good in here. Okay. And that's when it's got its big jump, right? Why? Look at the earnings here, guys. Look at the earnings. Things have changed at this company, right? From 5% or even losing to 19 plus 5, 40%, 210, triple digit, 490, 278. Okay, we got a 5, we got a 34, we got a 0. Okay. That's why the stock is consolidating now. It's got a 0. Plus, here's why. We got a lousy, they're not in a great group. 102 out of 197. They're in an average performing group. But that's a consolidation now there. If the stock can continue to go higher, it's making a beautiful coiled spring here. Are you starting to see the patterns yet? The idea is that as we watch these, if you're still with me, and I hope you stay with me because this is how I analyze charts. It may be boring, but there's gold in this, right? There's price and volume. And I'm not even talking about the fundamentals that are moving the stock, just a little bit down here on earnings. All right, you with me so far? That's SMCI. All right, let's go to the next one. Lattice Semiconductor. So here's Lattice going all the way back to 2002, up and down and, all around with this really long, let's call it a long consolidation, okay, where we go from basically in this area. Look at how long that consolidation is. That's years, okay? You could have made money in those years. But then when we had this volume candle here on the bottom, that's when things really started to get exciting. Right in here. So now let's look at that. So here we are all the way on the right side, and let's call this $6.85. That's our number at the beginning of March of 2019. Okay? Now, I'm not saying I'm Nostradamus and I picked the bottom. I'm just analyzing the last 5 years, right? But if you had your eye open, if this was maybe on your watch list, and I guarantee you it would not have been on my watch list. But Nonetheless, it's one of the best performers. You can now look at it. What did we say it was? It was 685 all the way on the left side of this chart. 685, had a consolidation, made a cup and handle, or just a cup actually, broke out on the other side of the cup, and that was really it. That was really it, was this price right in here. Okay, you see that spot? So we got that spot right there, and that's where it broke out. Now this one was weird. It broke out on not great volume, average volume, I'll say. Went up and kept going up. Now the stock though is, look at it, just kind of, we don't even notice it because it's on a log chart, but it's going up high percentages. The stock is at 20, what? $20, $34, $33. It's at least quadruple. Okay. So we've been at, look at all the weeks, I'll clear this. Look at all of the weeks of increased price. We, just kept going, creeping up, right? And then finally had a little consolidation and really broke out here again. Okay. So this was the first one, had a big long consolidation in here, broke out again at 30. Most of you have probably been gone. I might have even been gone, making a 4x on my money in just a few months. But then look at it. Look at how many weeks in a row. Look at how many weeks in a row. And they're all blue weeks. All of them in here, right? And then the stock does, does what every stock does. Consolidates, people sell off, people buy. It wants to break out again, people sell off, people buy, and the company keeps going higher and higher. Now, this is a long period of time to sit through. This is a fairly late stage base. This is why I don't buy these bases, because they're tough. So this stage base basically reset all of these earlier bases, okay? And so it reset, and then it created another buying point right in there. And look at it, it broke out. And it went up to $100. Now remember, we started this at $6, okay? And now you can see a really lousy period of time, which is coming into 2024. But still, it's a 10x at 685 to 640 to 6486. So that's how you look at that chart. All right, hope you're still with me. We're gonna keep going. The next one, now we're getting into some exciting ones. Apple, which I've been in the better part of, 12 years, something like that, in and out of Apple. And, if this was just one of those stocks that you just closed your eyes, you bought it in, 2003 when Steve Jobs wasn't there because he was fired. And then, he came back, I think in 2004, something like that, or a little bit later. Anyway, somewhere in there. And if you just put it in the drawer and fell asleep and woke up 20 years later, your 40-cent stock would be worth 200. That's an incredible amount of gain, okay? So just take a look at that picture. If you can close your eyes and go to sleep and wake up 20 years later, that's what your stocks do, but most people just can't do that. But even though 5 years came after a huge sell-off here, right? See that sell-off on the right side of the chart with the death cross, all kinds of bad stuff going on in 2019. And the stock is at let's call it 150 at the beginning of 2019. Here's what you would have had, going all the way to the left side over here. Okay, 150. Okay, and now it's split. So here's what happened from that stock. So the split cost, let's call it, $55. I think it had a 3-for-1 split. So $55, made a cup and handle on high volume. Right, so there was some sellers in there. Woo! And those were nasty weeks that you had to sit through, right? But you still probably wouldn't have ever been down below that where you got in, right? You would have given up profit, but if you never sold, you still wouldn't have given up all of your anything except for your profit. And then look at all the weeks in a row where it went up in 2020, like a lot of stocks did after they had those big high volume sell-offs. And it just built. Every week got higher and higher. Not building up on high volume though, unfortunately, until later on in here when people are like, I'm missing it. But this level here, if that's the breakout level, if you were able to catch it there, then you still had a bunch of weeks of higher volume happening in there. How many weeks in a row, all the way through the end of 2020, until we finally had some sellers selling it down to the 50-day moving average. Then it built the right side again. Remember, This stock was at $55 when we started, and here it is at 140, almost a triple. It makes a long consolidation. It coils the spring. It runs up again, makes a little cup and handle, coils that little spring, continues to make a run up. All the way up until this spot here, which is 180. Remember, we started at 55. It's now triple, 180. Okay? Then the stock, we had a bear market. In 2022 was a rough year. And so the stock basically did nothing during that period of time. This is dead money. And then it built the right side of the base. And a lot of people were just bailing on it. They were like, oh, Apple will never come back. Well, I don't know if they're going to ever sell fewer phones than they sell now, but they got so many revenue streams that you can't quit. That's the big lesson. And then it goes all the way up to 200. I think it went to 199, something like that. And now right now it's in a little bit of a sell-off, and it's testing that moving average. So we'll see what happens. But that's what you would have had, 55 all the way to 200 on Apple. Amazon. People love for me to talk about Amazon. I don't know why. Amazon that's a good looking chart. There's no question about that. 2002 at 80 cents, and it got up, it's almost 200. Let's call it 145 now. 80 cents to 145. If you would have been able to hold it, you'd have gotten some of that. If you would have made income all those years, you'd have gotten some of that. Most people just don't buy and hold. They sell off after they double or triple their money. But here we are at the end of 2019. Same deal. At 1,575, and I'll give you the split number in a second. But it's at 1,575. I think they did a 10-for-1 split, if I remember right. But what a beautiful chart, huh? Even in beautiful charts, there's still sell-off periods where it's rough to hold them. That's life, okay? So we got Amazon here, all the way on the left side of this chart. Let's just call it, $80, right? Something like that. And so you can see that it had a consolidation for a while in this area here. It just consolidated. And then finally it broke out. Had a false breakout here, corrected itself, and then what a beautiful candle that is, right? Look at that candle. High volume candle. Even though they gave up some earnings, this was another little box here where it collected. And look at all the blue weeks in here. Okay? And so now it's doing really well, and it wants to run up here, and it does. And all those weeks in a row where it runs up, right? It's doing it on pretty good volume. Some of those weeks. It did have a selling week. And then it comes back and tests this 50-day moving average, makes another consolidation. Look at that consolidation in this area. Resets the base, and now we've got, a long time of choppiness. Okay? Then in 2022, we have a bear market, and it breaks down. And a lot of people that I know bailed on it. They couldn't handle it. Some people could handle it, and they ended up having a great year this year. And that's why the lesson is don't quit, because even though sometimes you can't handle it, if you quit, you usually sell down here at the bottom. Unfortunately, that's the way life goes. All right, Palo Alto, another fun one. So look at that chart from 14 basically all the way up to 300. All right, so here's the weekly, taking a look at the right side. That's where it ended up. That's where it began 2019, $184. $184 is where it began 2019, but still into a nice looking chart all the way up into 2019. Big increases from 50 to 180, a little bit of selling off down to 110, and all the way back up to, what are we at, 184, right? Would have been nice to hold it even before 2019, but here we are at the beginning of 2019. Now, so let's say that the left side of this chart is roughly, $50, okay? And so we're at $50, and we have, a few little patterns in here, little cup and handle, little consolidation here, and we have a sell-off into 2020 like all the other stocks I've just shown you, all this area right in here. It builds back the other side on how many weeks up, right? And it can't get out of its own way, so it has a false breakout here. And look at the earnings. That's why the breakouts were false, right? Because it just wasn't building on good earnings. Then they finally righted the ship and said, well, at least we're not losing money. It made a double bottom pattern, and the double bottom pattern breakout is this. And this is the significant breakout on this page. Because you can see earnings per share after a whole year of being lousy in 2020, earnings per share now goes double digits. And so look at how many weeks from that breakout point, 1, 2, 3, 4, 5, 6, 7, 8 in a row of higher highs and higher lows. That's incredible. And a few of those weeks, maybe 4 or 5 of them, were on great volume. Then the stock does a little teeny weeny flat base consolidation, tries to break out, fails, makes a cup, gets rid of all these weak sellers, right? They can't hold it anymore. The weak sellers get out. And the stock basically says, okay, well, we're going to break out right in this area. And look at this candle. Now, it's not on great earnings, but that candle is amazing. From a normal 15 million shares a day to 47 million shares a day on that candle. And what does that candle tell you? It tells you there's a lot of interest in it. Look at how many weeks in a row it goes up. Higher volume, higher candles, higher lows, higher highs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of about 14 weeks were up weeks. That's a big deal right there, because now look at the stock. Remember where we started? We started at 50. The stock is at almost 180, right? 190. Has a little consolidation base right in here. Tries to break out on earnings here on good volume. Can't handle it. Goes up a little, but can't handle it. And now it's been in a very long consolidation for the better part of a year. This is a bear market too, a lot of it, okay? Then it goes up, some sellers come in, some high volume sellers, but we also have this candle right here, which is a gigantic breakout candle. Highest volume since this base. So we have a gigantic breakout candle, the stock goes up, consolidates, and it's making another consolidation here, and the stock wants to go higher. And it's in the number 9 out of 197 industry sector. So it's in the top performing sectors, the cybersecurity sector. Pretty interesting, right? You just see, but it takes time for these to develop, right? These are weekly candles, and this is a tough period of time to sit through, right? But if you can collect income every week on that, you can sit through it. I mean, it's still going to affect your portfolio. But man, if you had bought here at 50, it's not going to affect it that much. You're going to go from 180 to 140 and collect a couple percent a week. I don't know if you're still with me, but I'm going to act like you are because I'm still geeking out. I'm still having fun. All right, Netflix, another amazing stock. Another amazing stock. Look at this thing. From 80 cents to 450, let's call it. Actually 600, I think is where it was. Anyway, what a run Netflix has been on, right? And it's continuing, I think, to go on this run. So at the beginning of 2019 was let's call it a $300 stock, okay? It was a big sell-off there coming from 400 to 300, but at the beginning of 2019, it's a $300 stock. So here we are at $300 stock, and we've had a lot of choppiness, right? We had all this period of time where it had to sit through this choppiness. This is a tough period of time to sit through. This is, right? Not a lot of uptrending, but it's at 300 and staying right around there. Didn't really go too much lower, 260. Made another cup and handle on top of this cup, and then had a beautiful breakout on earnings per share of 107% increase quarter over quarter. That's good stuff. Look at that. Look at that volume. Earnings per share basically on top of a 333% earnings per share the quarter before, right? And so it went up here, and it at its high and made this little consolidation again. Very nice. Pretty cool. And then it had 165% earnings. It's increasing its earnings. The stock goes up, right? Now, it doesn't go up in incredible volume, so that's why the stock goes into a consolidation phase. And then it has good volume on this breakout, but for some reason or another, it can't handle it. So it makes another little consolidation on top of the earlier consolidation. So now you got a big spring coiling here. Big spring coiling here. When you get a big spring coiling, when you hit that jack in the box, it goes boing, and it pops away, right? And that's what happened. The stock went up to what, $700 and something here. We started at 300 and went up to 700. But then we started to have declining earnings. Earnings are important, everybody. Earnings are important. We started to have declining earnings, and the street knew it. And so as those declining earnings kept coming out from 139 to 87 to 83 to 12 to 6, the street sold off from $700 something all the way down to 160. Now that was tough. If you didn't take your profits out here, you'd be kicking yourself. But that's what happens. But the stock has built back, and look at this. It's come from 160 all the way back up to 500, and it's building the right side of this base. And it's got a 90 relative strength. Okay? So if you had quit, that would have been tough. But you would have been down significantly. So remember, you started at 300 and it's down to 160. So you'd have lost half your money. Not if you're making income, you'd have hopefully prevented some of that. But if you were just doing the buy and hope thing, like a lot of people do, they would have lost a lot of their money right in here. But you'd have made some of it back when you hung in there. All right, Lam Research, electrical semiconductor company. Okay, beautiful chart going all the way back to 1996, from $6 all the way to $800, 100xer. Okay, so at the right side of this chart, it's 138.06, and now let's look at it. 138.06, and this baby has just had a rocket ship going up. When you get a channel like that going straight up, right? You see that channel? And it goes up in that channel, that's healthy stuff. And so even though it had a big sell-off in 2020, that would have been tough to hold through, it started to break through the right side of this, right in this area. Didn't have a lot of volume, but it had some momentum, broke up, went down, checked its 50-day and its 200-day moving average, bounced basically right off the 200 moving average, made a cup with a little handle, and this is the big candle right here. Okay? We have a couple of spots with big candles on them, but that's the big one right here. High volume breakout, I think. Right after earnings, no, low volume breakout. But still, 1, 2, 3, 4, 5 weeks in a row of higher highs and higher lows, but is on low volume. So unfortunately, sometimes these things, are not predictable, and it went up. But look, it's got this channel going on for a long period of time. Look at all these channels that it's going on, 45-degree angle. Then finally, this is 1, 2, 3, third stage base. Third stage bases are tough, and so it has a weak chance of going higher, and it basically sold off in here. When it finally did go higher, because it had some good earnings growth, nice blue numbers in there, it went higher, but it consolidated up there, and then they couldn't handle it and sold off during the bear market of 2022. Now, bear markets, everybody, are healthy, because what they do is they clear out the weak holders. So if you can hold through these bear markets, then you get to experience some of this. Look at this, 25% earnings, and then we had a really lousy candle, but it was a hammer candle. I have other videos that talk about hammer candles. And then it came up the other side of the hammer candle with really good volume, not as much as the selling volume, but it's higher, ends up higher. That's healthy. And then it goes 1, 2, 3, 4 weeks in a row of pretty good volume, but pretty good price increase. And now we've got a consolidation happening right in here. And then on the other side of that consolidation, we have a breakout and another consolidation. And it looks like it's in a breakout right now. Lam Research. So we went, what did we call this? 150 to 600 to 800 it went to, right, last week. 800. This is the don't quit area. All right, I'll keep going. Market access holdings. I'm going to go a lot faster now, right? IPO base. IPO base selling off here, trying to build back the other side, selling off even more, going down to $5 from a high of $25 on the IPO. But look at this. We'll talk about this in a second. This is really good in here. A lot of up weeks. So let's go to the next page. All right, right side of this, you can see those are those up weeks, and it's at $214. You're like, oh my God, it can't go any higher. And this is a thing that I get from a lot of people. I'm not going to buy at these prices. The stock is already at an all-time high. Like, there's way more chance that it could go down than it could go up. Like, that is the dumbest thing that people say. Like, a stock that is at 100, like right in here, the stock is at 100, and dumb people go, well, it can't go any higher. Like, it came from 50 to 100, so like that would be stupid for me to buy it at 100. I'll probably go back to 50. Like, that's just so stupid, because you can't get to 110 unless you go to 100, right? Stocks make new highs, they go higher. And then they go make a new high and they go higher, right? If a stock is a good stock and it's on an uptrend. So get that stupid thing out of your mind. This is not, Black Friday and shopping at Christmas for TVs and trying to find the best price. You're trying to buy things that are breaking out because those institutions, they want to get in these companies that are breaking out. You want to be with them. You want to be with them. So here we are at 214.30 after the stock started at 50, okay, or even lower before that, right? It's at quadruple, so you'd have never bought it if you were one of those dumb people that's like, oh, I can't buy the stock at its high. Okay, whatever. But we're at 214.30. Let's call it 215. Remember that number, 215. And here's what's happened since the 215 level. It's right here on the left, and the stock was just lovely, right? Just lovely. So here it goes in up channel, beautiful up channel consolidation, right? Coming into 2020, we had a big sell-off like everything else. And then we had a beautiful up channel again with a nice cup and handle. This is all very healthy action, right? This is where the healthy action started, right? It just kept building and building. And look at the volume here versus the volume here. It's just a totally different deal. The stock changed personality, okay? And so that tells you that, when it sells off, there's still going to be people coming in. It made this little consolidation here and went up, blah, blah, blah. All right, and it topped out at 600. We had a few bases here from 200 to 400 to 600. Now we're in a third stage base. It is time to start taking your profits, or at least protecting yourself, because then you have to sit through this whole lousy bear market of 2021 and 2022 for this stock. That's tough. That's a tough one. Now, who knows what's happening here, but if you had quit, at 220, you wouldn't have gotten it to 400, and maybe it's going to do the same thing. I don't know, but that's market access. All right, TransDigm, beautiful chart, lower left to upper right is what we want to see. TransDigm Group, lower left to upper right, just even right before 2019. $340 is the price, and now let's analyze it. 340 on the left side of this chart. It went not straight up, but it had a beautiful up channel there. It really sold off during the 2020 sell-off right in there. Horrible sell-off, right? No way you could have held that because it was below your start price. I mean, just no way you could have held that. But if you could have, then you're starting with an early stage base right in here, a little consolidation, a breakout. None of these companies were making any money, so they were reporting lousy earnings. But look at what's coming, right? We had a long consolidation, coiling that spring right in there. And then the company becomes profitable again. Double-digit, triple-digit numbers, coiling this long spring while it's becoming profitable. Can't really break out. But boy, look at how long this spring is. I mean, it's like a couple years. And then it breaks out. And now the stock went up to $1,000 for TransDigm. Remember, where we started was 340. So it's basically tripled. Now, we had that rough period in 2000 where it went down more percentage-wise than a lot of companies. Okay, getting to the end. Here's Broadcom, one of the greatest performing stocks of all time. From 16 to 1,000. Look at this, beautiful up chart. Like, it's what you want to see, everybody. Like, if you're in a breakout stock, you want to see this. Up with a consolidation, up with a consolidation. All right, we got $233. That's the price on the right side. Let's analyze it. All right, so we got 233 and we got this beautiful little uptrending channel. We had a healthy sell-off, making a new consolidation. Okay, we had a breakout, couldn't handle it. We had a breakdown during 2020. We set up this little spot. Notice how earnings per share is down again. We set up this spot here on the chart. That's another little consolidation, 8-week consolidation, and then it breaks out. It breaks out here essentially on earnings per share that finally goes positive, and look at that volume, right? That's right in here. And the stock makes a little consolidation. So notice how it stair steps, right? And it just keeps stair stepping. That's what you want to see. Little stair steps. And you want to see these long channels. I mean, every week it's going up. Look at all the blue candles in there. Not on high volume, a lot of them, but some of the breakout ones are. And then consolidation's pretty healthy. Not a lot of selling on low volume, on high volume, I mean. A lot of selling on low volume. And after a long several month consolidation, it has a breakout again. Okay? And then we go into a bear market in 2022. We have to sit through all of this, but that wasn't too bad, right? And then the stock runs up to 1,049, which is where it is today. Microsoft. Okay, I'm going to start going faster because I know your brain's getting this now, right? So Microsoft, beautiful chart. This one goes back to 1996. And, you know, we're talking about a $6 stock that goes to a $400 stock during that period of time. But there's a period of time in here where it's kind of dead money, right? This is a long period of time where from 2000 to 2013, it's kind of dead money. Not going up, it's just consolidating for a long period of time. Look and see how that works. All right, so look at this. This is beautiful lower left to upper right coming into 2019. I had some of this action. I can't remember what year it was. I think it was in this period of time. I bought it. I think it went up to here and I sold it. I thought I was the hero. And then it, of course, continued to go higher. And I should be still in that selling calls against it, but you know, I didn't learn the lesson to not quit at that time. So I switched stocks. Did okay. I went to Alibaba and did okay the next year too. But anyway, so here we are. And then now you can see, so here's the price at 101. Let's call it $100. Okay, so here we are on the left side of the chart at $100, and look at this. It's gorgeous, right? If you want a model stock, this is the one, because it's gorgeous. Got that channel going on there. 2020 sell-off, the little V, and then it breaks out again. Gorgeous little channel right there. Consolidation. Notice the stair step, right? Boom, to boom, to boom, up there. Hopefully skipping over that one. Up and up and up and up. And that's what they do. They just keep going up. And then we had this big, crappy bear market, which, you know, you don't want to be in that, but sometimes you have to sit through that, because if you'd have sat through that, now your stock is at an all-time high. Okay? Remember, we started at 100 and the stock's right around $400. 367 right now. Visa. I made some money in Visa a while back too. And so look at that, lower left to upper right, 12 to 260, a 10 banger. Okay? Lower left to upper right, beautiful chart. On the right side of the chart, it's basically 134. Let's take a look at 134 and how that impacts us. Okay. So what do we have? We've got beautiful channel here. Okay. Notice the volume on some of these weeks where it's breaking out right in there. That's a good volume week to tell you that there's more good stuff happening. Little tiny 5-week consolidation, and then a breakout on good volume, and then 5 weeks in a row out of 6 of up volume. Look, this is incredible. This is basically the stock going from 100 to 160, 170. Consolidation there, level, finally gets to the other side, breaks out again. 2020 happens. The other side of that consolidation is there, the handle. Tries to break out, does a little decent job getting up to $225. Sells off. There's usually going to be 1 or 2 big sell-offs on the 200-day average every year. So you have to kind of remember that. All right, there was a sell-off, but next to it, there was a really great hammer candle that went up the other side. Not on great volume, though. That's why you probably didn't get a big breakout when it finally did try to break out. You had a little cup and handle happen here. And then now look at this. It makes another channel right in there. That's a beautiful little channel. Okay. Then we had the 2021, 2022 bear market happen right in there. That would have been tough to sit through, but if you sat through it, you know, you're sitting again at a record level. Now let me talk about record levels. Why is a stock at $260? Well, a couple reasons. Number one, their earnings are increasing. That probably means their sales are increasing. Usually those two kind of go hand in hand over time. If your earnings and your sales are increasing, you're more profitable. You actually have more dollars of profit. So your earnings are higher. So unfortunately, they don't do these as percentages here. They do them as percentages down here. But the dollar is being devalued. And so as the Fed prints more money and as the government spends more money and as your inflation goes up, your dollar is becoming worth less. So the prices have to go up. That's why prices have gone up ever since 1920 when we created the Dow Jones Industrial Average, right? Or 1913 when we created the Fed, is because we've been really debasing the dollar for all those years. The dollar's only worth about 1% of what it was worth 100 years ago. We've lost 99% of the value. That's why the stock market has gone up from 100 to 35,000, right? Because we've lost all the value of the stock market, of the dollar, I should say. And that means the stock market value and home values and prices of cars and prices of eggs and prices of everything seem to go up when really they're just tracking inflation. The same is true with the general stock market. So you have to have super stocks to outperform the general stock market. That's what we're looking at and looking for is these super stocks because they perform better than the S&P 500. S&P 500 over the last 50 years has done 9.4%. I think every single stock on here has done double or triple digits, maybe even quadruple on some of them, but double or triple for sure, right? Even this one, $140 to $260. Well, that's practically a double, right? So all of them do well because they're outperforming inflation and they're being inflated at the same time in value. Does that make sense? That's my little soapbox on inflation, how we're being lied to. Monster Beverage, another incredible stock. It's so cheap that you can't even put an index number on it. It's basically pennies on pennies, right? 0 all the way up to 40. It's at 57 now. That's the longer term view. Look at that beautiful lower left to upper right with, it's still going up even though it's choppy. At the beginning of this chart, it's $50. That's at the beginning of 2019. Let's take a look at the next one. So it's at $50 on the left side of the chart, and then it just continues to do its little stair step up, right? Boom to boom, even through the 2020. Stair step, stair step, stair step, long consolidation, brand new base here, double bottom base, giving us a breakout point at the top here. Long consolidation, really, okay? Tries to break out, can't handle it, goes up the other side, tries again, but look at now all the weeks in a row of higher prices, right? That's what you want to see. And then a consolidation, and then finally it's coiling that spring and it jumps up here. So from where we started, $40 or whatever we were at the beginning of 2019, we've created this kind of a move. That's what you want. Make sense? Let's keep going. Align Technologies, another really great. These are the ones that make the Invisalign braces that a lot of people were wearing. Still a good performer. I just don't think it's one of the high flyers anymore. But you can look lower left to upper right. It's beautiful. Lower left to upper right. It's beautiful. With a sell-off coming into 2019, stock is at 186.71. Let's look at it. 186.71. It made a beautiful up channel right in here. Right, stayed in a channel. Had this horrible down channel in here. And I haven't traded this stock in a long time, but this down channel would have scared me because it would have been back at the beginning of where I started. And then another 2020 down channel. And then look at this from the bottom. Nice, right? But I can't take credit for that. I would say it breaks out here. But look at this channel. Look at this candle, right? This is the big one right here on the chart. Earnings per share is up 52%. Look at the volume on that candle. It's going crazy right here. Going crazy. And so that's when the stock really takes off and goes up and hits its all-time high of, looks like about $700. Okay? So we started at what, 140? What do we say? 150 to $700. And then we had a big sell-off during the bear market. Consolidating, another big sell-off. There's just not a lot of healthiness going on in Align Technology right now, but it certainly was a great performer as you just saw with those numbers. Getting toward the end. Hopefully you're starting to see the patterns. Lower left to upper right on the monthly. NVIDIA has been incredible from basically 40 cents to $400. It's amazing. Lower left to upper right. And those little tiny candles on the left are because it's a logarithmic scale. And as we grow, look at how beautiful those candles become from $14 all the way to $260, where it sold off at the beginning of 2019 to $136. And now let's analyze it. $136, Basically had a long consolidation here. Finally broke out. Look at all the weeks in a row that it went up. Higher lows, higher highs, right? Some good volume weeks in there. A couple of them here. Another couple. One bad week. But that was in a channel. 2020 correction was very shallow. Another channel. Another consolidation. And then boom. Just kind of bouncing its way up to the all-time highs, right? And that was at 340 bucks. Sell off here during the bear market. Other side of the chart is right there. And look at the candle. Oddly enough, that's the candle with all this volume here. And you have all this up stuff going on. And now we got a consolidation going on. So NVIDIA is, to me, it looks poised to go higher at this point. It's about a $500 stock at 480. And this is a long coil right now to me. So if the company can keep executing in AI and chips and whatever else they make, they're just killing it. Then I think we're going to see, a much higher stock. And you're going to see that over the years, over the last 5 years, it's been one of the top performing stocks. United Rentals basically had a long consolidation on the left side, but lower left to upper right from the middle. And then we got lower left to upper right with a long sell-off in the middle of this chart. Now we're at $110, and let's look at it. 110 on the left side of the chart. We've got COVID sell-off, and then we got this little nice chart. Just kind of bounces up and down and mostly up, right? Then it makes the bear market consolidation, and then it goes up again, sells off at the 200-day moving average. But it's very healthy with a long consolidation. And right now it's in a breakout of a consolidation with some good volume. Now, the volume down here was way higher, right? Even this volume was way higher than it is now. But still, you want to see good volume on breakouts. United Rentals. If you're still with me, good job. Hopefully you're burning these patterns into your head. I've probably analyzed 1 million charts in my life now. And so I can look at them and see where I see the consolidations. I can see where the channels are. I can see where the patterns are. And your brain should get to that. Now, that being said, you should be able to discern from the 8,000 or 9,000 stocks that are out there to the top 3 or 4 that you want to own. I only own really 1, maybe 2 stocks. And that's how I believe in concentrating within an asset class. And you should too. But this is how you know when things are breaking out and breaking down. You want to be able to know those things so you can anticipate them. Beautiful looking chart, lower left to upper right. And then you're seeing here, after a big sell-off, the stock was basically $400, Regeneron. Okay, this is biotech, so it's crazy. It's hard for me to be in biotech. But what did I say it was $400? Yeah, $400 on the left side of the chart. And then immediately it went down into this long cup and handle, which is a base 1 position, cup and handle. And it broke out. In 2020, it didn't really have the big sell-off that some of the other ones we were looking at did. This is 2020 right in here. Didn't have a huge sell-off, a little bit, but not much. And then broke out with this huge volume candle here and went up, consolidated up, and then made a cup and handle. Now, that's a good-looking chart because we can draw this channel basically like that. And that's where the company is doing. It's in that channel. It's been in that channel for 5 years. And so the stock has gone from 300 to essentially 900. It's a triple. Regeneron. Ulta Beauty, lower left to upper right, IPO candidate, lower left to upper right, making a nice cup into this, and it had a sell-off going into 2019. We're starting this view on the next page at 255.03. Here we are at 255 on the left side of the chart. And you're seeing a long consolidation with some sell-offs in here and a crappy 2020 COVID sell-off. And we had this run-up, nice channel here. Maybe if you didn't catch the whole run-up, it starts right in here. So it bounces up, right? Up higher, up higher. It's a long consolidation in here. And now it's starting to go up again, right? Making the right side of a cup and handle pattern right here. The breakout here is at about $500 on Ulta Beauty. And this stock does want to go higher, I think, based on what I'm seeing on the charts. But you're seeing that stock go from you know, where we started. What did we say? 260 to 468. Okay. Extra space storage, beautiful chart. IPO goes up, sells off, lower left to upper right from that point. And then that's the middle of the chart, lower left to upper right, coming off a double bottom pattern on the right side and starting our analysis at 87.84. 87.84 on the left side of the chart goes from 87 straight up into a beautiful channel here. This is a nice channel, right? And then it sells off, 2020 sells off, right? Comes up to the other side of that sell-off, tries to break out on high volume, doesn't have enough, consolidates, and then this is the real candle on the chart. This is the one that propels everything else. High volume candle on a breakout, and look at how many weeks out of how many weeks. This looks like about 20 something weeks, and looks like about 16 or 15 of them were blue weeks, something like that. Amazing. Had a little consolidation, sell off there, just made a cup, kept going higher. So you can see it. Boing, 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 kept going higher. All the way up to 230 bucks, right? From where we started this on the left side of the chart. Let's call it 100 bucks. And then we had a rough period of time here, and it's still kind of bouncing. I think it's got a lot of work to do to get back up to these highs. It may eventually get there, but we'll see. All right, Ross Stores, lower left to upper right, beautiful. Lower left to upper right, a little choppier. Had a sell-off going into 2019, and then we start the analysis at 85 bucks. So we got 85 bucks with the 2020 sell-off in here. But look at that channel right there. That's a nice way to start. A lot of them doing that, and then it has to come up. It's got to get rid of all these sellers in here, right? And finally, this is the level that it wants to break out, but there's not much love in there for the breakout. So the stock really kind of went to basically 135, and it's just now, the funny thing is, it's just now back to that, and that's been a couple of years since it's been back to that. So if you can avoid getting yourself dug into one of these holes, right, then you don't have to fill the hole back in, because this has all been filling this hole back in, the swimming pool full of water and full of dirt, so we can just start to move from the other side. All these sellers. How you doing? Fortinet, lower left to upper right. A little choppier. And then we start our analysis there at 66 bucks. And you can see the stock starts at 66 bucks, has a split. So now let's reevaluate the 66 bucks, call it $15. And you can see this whole chart here is lower left to upper right all the way here. Look at that channel. It's just a gorgeous channel. That's the kind of channel you want. Okay. Consolidation. Got to its all-time high. Tried to break out. It's breaking down. And now it's trying to figure out what it wants to do over here. I think it's got a lot of work to get back to that $80 level. But still, a $15 stock that ran up to about 80 bucks. Biogen is a biotech company, not my cup of tea, but a lot of lower left to upper right with a big consolidation on the right side. There we go. A lot of choppiness. This is biotech for you. Like, you got to be able to have cojones to sit in this thing. A lot of work. But here we go. Like, I wouldn't own Biogen because it's just so tough. Look at this. Even from 2019, where we started at 318, the stock has basically been sideways. It's been dead money. But for some reason, it popped up on my one of my best stocks list, because I think it's that all-time, from $3 to $400 kind of performance. Just lately, it hasn't been very good. So I know that was a really deep dive. If you sat through this, give yourself a pat on the back, because most people are gone by now. And that's what pattern recognition is looking at chart after chart after chart and seeing what the commonalities are. Now, let me give you the overall concept of why I look at charts. Because I've gone back, and with my mentors and my people that have researched things before me, William O'Neill has basically done a lot of the research for me, and I've kind of piggybacked on top of that. But over the last 120 years, there are certain stocks, super stocks, Apple, Dell, Microsoft, Cisco, Ford and GM way back, Starbucks, Piggly Wiggly, which is one of William O'Neill's biggest first stocks. Macy's, some of these companies that have just outperformed by thousands of percent the regular market have certain characteristics. Now, a lot of them are fundamental. Earnings growth, sales growth, return on equity, new products, exciting management, competent people running it, in a great sector, those kinds of things. And that's part of it. The other part of it is what you just saw, is getting your brain used to seeing patterns of winners. Because when your brain starts to get patterns of winners into it, it can now say, oh, that doesn't fit what the winner was. You'll be emotionally saying, oh, I should buy this company because Kramer said to buy it. But like, you're killing yourself if you do buy it. So it's a combination of fundamental and pattern recognition or technical analysis. So hopefully you've gotten a taste of what I do every day. I look at charts, right? I spend a lot of time looking at charts. I can therefore analyze them now. I didn't even analyze the left side of the chart with all the fundamental stuff. I just showed you the technicals, and I showed you what I look for. You saw certain things: patterns, consolidations, volume breakouts, tests of the 50-day moving average, tests of the 200-day moving average, those kinds of things. And when you do that enough, then your brain starts to analyze it. Okay, I'm just going to sign off now. If you've been here with me this whole way, congratulations. Keep doing more of this. And by the way, try to focus on higher cap stocks, not cheap stocks, not penny stocks. Those are the ones that are really tough to predict. The ones that are easy to predict have a lot of institutions in them. The institutions drive the price and the volume, and it's a lot easier to read charts. You saw that on SMCI early on, that it was a little hard to predict because it was so choppy. And those choppy stocks are a little bit difficult for pattern recognition. All right, I'll see you on the next video. Thanks for being here. Bye.